Everyone keeps waiting for the Florida housing market to collapse, but the April numbers are telling a very different story. Inventory is tightening, buyer demand is improving, and prices across much of South Florida are still holding surprisingly steady. Now, does that mean we're back to the insanity of 2021 and 2022? No. But it also means the people expecting some massive housing crash may be misunderstanding what's actually happening in today's market. Because this market is no longer being driven by hype, it's being driven by inventory, affordability, and serious buyers. And today, we're going to break down exactly what happened in Florida during April 2026. Then, we'll dive into Broward, Miami-Dade, and Palm Beach County so you can understand where the market is strengthening, where buyers still have leverage, and what this could mean moving into the summer months. And as always, this is for single family homes. Let's get into it. Let's start with the statewide numbers first. Florida's median sale price came in at $420,000, up 1.8% year over year. Closed sales increased 2.4% to over 23,500 sales statewide. Inventory dropped significantly by 13.7%, and month supply dropped to 4.7 months. Honestly, this is one of the biggest takeaways from the entire report, because just a few months ago, many people believed inventory was going to continue climbing throughout Florida. But instead, we're seeing supply tighten again while buyer activity improves. That does not mean the market is exploding higher, but it also does not support the idea of a market collapse. Let's zoom out and look at the trend instead of just 1 month. And this is exactly why I always tell people not to overreact to a single headline. Back in January, Florida's median price dropped to around $405,000. Fast forward to April, and prices rebounded back to $420,000. That's important because real estate is seasonal. The beginning of the year is usually slower. Spring tends to bring buyers back into the market, and that's exactly what we're seeing here. Now, are prices skyrocketing? No, but they're also not crashing. What we're seeing instead is a market trying to normalize. This next chart may actually be the most important chart in the entire video. Look at the direction of inventory. Back in May of last year, Florida had about 5.7 months of supply. Today, we're down to 4.7 months. That's a pretty meaningful shift because inventory is one of the biggest drivers in negotiating power in real estate. Generally speaking, lower inventory favors sellers. Higher inventory favors buyers. Now, technically, according to Florida realtors, around 5.5 months is considered a balanced market. So Florida moving back below that level tells us conditions are tightening again. But this doesn't mean every seller suddenly has leverage. Today's buyers are much more cautious and payment sensitive than they were during the low rate environment. So overpriced homes are still sitting. Meanwhile, properly priced homes are moving. And honestly, that's probably the best way to describe today's market. Selective. Now, let's break down the South Florida counties individually because this is where things become much more interesting. And as always, every county behaves differently. Starting with Broward County. Broward had a pretty strong month overall. Closed sales increased 7.6% year over year. At the same time, inventory dropped over 18% and month supply fell to 4.6 months. That's a meaningful tightening of the market. Now, despite stronger activity, median price was down slightly by 1.6% to $620,000. But this is exactly why median price alone never tells the full story. A small decline in median price does not automatically mean home values everywhere are falling. Sometimes it simply means more lower price homes sold, fewer luxury homes sold, and the mix of homes changed. Overall, Broward still looks relatively stable. Now, Miami-Dade continues operating almost like its own world. Closed sales jumped 8.6% year over year. Inventory dropped 14%, and month supply fell to 5.4 months. Now, yes, Miami-Dade still has slightly more inventory than Broward and Palm Beach, but buyer activity was very strong this month. And despite the strong demand, median price dipped slightly by 1.5% to 670,000. But here's what stands out to me the most about Miami. Luxury activity remains extremely strong. High-end buyers are still active in this market. And that's one of the reasons Miami behaves differently than many other markets across the country. Miami continues attracting international buyers, investors, wealth migration, and luxury demand. So while affordability pressure absolutely exists for local buyers, Miami still has unique demand drivers supporting the market. Now, Palm Beach County also had a strong month. Closed sales increased over 14% year over year. Median price rose slightly to 650,000. Inventory dropped over 18%, and month supply fell all the way to 4.4 months. So Palm Beach is showing many of the same themes we're seeing across Florida overall. Demand improving, inventory tightening, and prices remaining relatively stable. But again, affordability remains one of the biggest challenges across the board. Now, here's the bigger picture nobody should ignore. Today's market is completely different from the pandemic frenzy years. Back then, rates were ultra low, buyers were emotional, and people were waiving almost every contingency imaginable. Now, today, buyers are more cautious, negotiations are more common, inspections matter again, and people are much more focused on monthly payment affordability. But despite all of that, Florida still doesn't have enough inventory in many desirable areas to create widespread price collapses, especially throughout South Florida. And that's why I keep saying this market is not crashing, it's normalizing. So, what's the main takeaway from the April 2026 market report? Florida real estate is continuing to stabilize. Buyer demand improved, inventory tightened, and prices overall remain relatively steady. Now, does that mean prices only go up from here? Of course not. Real estate is local. Some areas will outperform, some areas will soften, and affordability is still putting pressure on many households. But if someone is waiting for a repeat of 2008 simply because rates are higher, the current data still does not support that narrative. If you found this market update helpful, make sure you subscribe because every month we break down the real estate numbers behind the headlines so you can make smarter real estate decisions. And if you're thinking about buying, selling, or investing anywhere in South Florida, feel free to reach out. Thank you for tuning in to Francisco's Key Insights, and I'll see you next time.